You're watching Business Agenda. The fashion, wholesale and retail PAS Group, which includes clothing brands such as Metallicus, Review and Yarra Trail, will make its debut on the ASX on June 16 in an initial public offering raising $120 million. The PAS Group has so far been a success story that has seemed to defy recent retail gloom. Well, for a start, it's in fashion, which has generally struggled since 2009, and it's in retail, which was similarly hurt by cautious shoppers following the GFC. But PAS Group, with 8 retail sites in 2005, has continued to grow through those tough years, now with 220 retail sites around Australia and New Zealand. Eric Morris, the Chief Executive of PAS Group, joins me now from our Sydney CBD studio. Eric Morris, thanks for being there. Now,
hello, hi.
Hello. Now, you have some well-known clothing brands which sell in standalone brand stores, but part of your story is designing and making clothes for Target and some of the other retailers under their brands. Tell us a little bit about PAS Group.
Well, our business is really split into 2 distinct segments. We've got our retail segment, where we've got just over 220 retail stores. And then we've got our brand distribution business, which we design and distribute product through the likes of Myer, Target, Big W and Kmart.
Right, so you design, for that second part of the business, you design clothes here and
yes,
manufacture in Asia, but under someone else's brand, like Target, etc.
No, there's 2 parts to that. We do some production for Target under their home brand, but a large part of our growing part of our business is actually in our brand licensing business, where it's actually under brand names of either brands that we own or brands that we license.
So how have you been able to grow so strongly in the last 8 to 9 years when really the retail sector generally has struggled?
I think there's probably a few different secrets to that one. The first one is about the vertical retail side of our business. And as you mentioned earlier, we had 8 stores in 2005, and we've got just over 220 stores today. We've actually focused a large portion of our business around diversification, and we are diversified across gender, across different age demographics, across regional and metropolitan locations. So we've got certain brands such as the Black Pepper brand, which is a growing part of the Australian demographic, and that is aimed at more of the regional or neighbourhood shopping centres. And that has actually been a really good growing part of the business. As we're all aware, it is the largest growing segment of the Australian marketplace.
Sorry, which is the largest growing sector of the Australian marketplace?
The older demographic,
right,
which
okay.
The Black Pepper brand is aimed at. So that's, we've grown quite heavily over the last number of years, and we've grown that to what, when we bought, was ostensibly a wholesale business. We now have 93 of our own retail stores, with a significant plan to grow further over the next few years.
It's obviously servicing some part of the market because, I mean, you know that in many high streets and shopping centres, shops have been closing down. But how big is online for you?
Online is an important part of our business. We do see ourselves as a true multi-channel retailer. And it's a growing part. It's growing at quite a rapid rate, and we do anticipate this continuing to grow at a rapid rate through investment in our online channel and websites, social media and all other forms of digital communication.
At what sort of percentage?
We're currently growing at just over 45% year-on-year basis.
But what sort of percentage does it represent of your business?
Of our total retail business, of the brands which have an online channel, is around 6%.
Okay. Now, why float? Is it just to give you and your private equity investors some big dollars?
No, not at all. It's really, the private equity guys have obviously been in it since 2004, since when we started the business. But a lot of that is really to do with continued growth. We've got a number of pillars to our growth strategy, and one of them is actually continue our acquisition trail. We haven't done any major acquisitions since the end of 2007. Some of the private equity funds that we've got are in runoff, and we haven't been having any major investments. So obviously we'll be utilising proceeds of the IPO to pay down debt and be at 0 debt at IPO time. And we will have a substantial acquisition facility to actually go out and continue the acquisition trail.
So you are going to use a lot of the money raised for retiring debt?
Yes, the majority of it will be used for retiring debt.
Yeah. Now, retail has been recovering this year. Do you think the sector is on a much firmer footing more broadly, particularly as interest rates stay low?
I certainly think so, and I think the sector is actually in a really exciting place at the moment. We're genuinely encouraged by the international arrivals in Australia, and we certainly see a lot more excitement in the shopping malls with the likes of H&M and Uniqlo and Zara in the malls. And we've certainly seen that it is driving foot traffic to the centres and has really livened up retail apparel in Australia.
Okay, so are you feeling pretty optimistic about the outlook for the economy more generally? Those cautious shoppers may not be there anymore, and how that might affect you?
No, we do think that it's all about the different brands that you've got and ensuring that you've actually got the right offer to go to market with. I think it's important, and the key brands that we have in the portfolio. We focus very heavily on design, and all designed in Australia, designed from the bottom up, without going overseas. And traditionally, Australia has been pretty much a copycat market without all the internationals being in play. So the key for us has really been placing a very heavy emphasis across design, and across our group we've got in excess of 45 designers.
Okay, well, one thing that is of interest to people, I think, is how do you ensure that the clothing manufacturers in Asia that you use are safe for their workers? Because, of course, we've had, the shocking fires in some factories in parts of Asia.
Yes, we've certainly got a compliance team which do check all the factories out. There is some significant compliance in place if you want to do a business with a lot of the majors such as Target and Kmart. And we do take it very, very seriously and will not go into any factory which is unsafe. So it's a very high on our agenda.
All right, Eric Morris, we'll leave it there from PAS Group. Thanks so much for joining us.
Thank you very much.